Hey guys, let's have a look and see what's been happening in the market lately. So, as you know, we've been trading within this 5 year parallel channel. We've tagged the bottom here, 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 and here. So, that's obviously showing good support there down at the bottom. We've obviously also tagged at the top here and here. And when we look here, we've obviously rejected there. And then we're doing the same now here, and we're probably going to get up and tag again soon, and most likely again reject at that resistance. We've obviously also shown that this has acted as a good support here when we've come through and tagged down there. So that's based off this high and the market high here, and then it's come through and acted as support. So let's have a look and see what sentiment is like at the moment. All right, so we've got green bars still. So we're looking at that there. It's telling us everything's still okay. Sentiment's okay. Nothing's really going too wrong. I do say that we should always check out both the index and the ETF, and we should definitely do that. So we've got a light green there, which is indicating of somewhat of a potential change that's going to happen in trend there. And given the time of year, it's hard to really say what's going to take place, but that's what it's indicating at the moment, that probably going to start to see some form of minor correction taking place probably early January. When we have a look here at the bellwether indicator, we can obviously see here these negative divergences. So this is, a good indicator for market health overall. And we can see here, when we were heading up on the S&P 500 down below here, we're actually indicating an issue there within the market. We're doing the same thing again now. We're heading down and still we're flat here at a new high. RSI is obviously also pointing down. The only thing sort of bullish here is that the MACD could potentially curl up. We'll have to see how that plays out in early January and just go from there. Here's a closer up view of that if you wanted to have a look there. Next up, we've got the 4 different sectors we want to have a look at. So technology here in the top left, communications in the bottom left, financial in the top right, and consumer discretionary in the bottom right. Seeing that financials are starting to roll over and consumer discretionary has rolled over. So the only thing keeping the market up right now is the technology sector and communication sector, which is as to be expected. Having a look at bonds, 30-year on the left, 10-year in the middle, 2-year on the right. This is bad. The 2 years selling off, the 10 and the 30 are holding up, 10 slightly selling off, the 30's holding up. That divergence between them is really not good. And you would know this if you were part of the Discord. The Discord is free to join, so get on there and have a look and stay aware, because bonds are extremely important and they are way bigger than the stock market. So when these have an issue, the stock market has the issue. Next up, RSP, which is the equal weight at IWM and IWC. Again, curling over as to be expected with the bellwether. This is the trend indicator here, which is why the bars are colored. So you can see that there. When we go over here to the total put to call ratio, we've averted here from getting a sell signal. So we've nearly crossed down enough to get the sell signal and then cross back up, but we didn't. So we haven't got a valid sell signal. You can see these red lines here were other previous valid sell signals where we've crossed below and crossed back above. That's a sell, and the market has sold off. Again, another sell, market has sold off. Another sell, market has sold off. Another sell, market has sold off, and so on. Over to the VIX. We've closed 2 days above the 5-day moving average here. Technically, this is a sell signal. Our MACD is starting to look like it's going to start to curl up soon. Stochastic is also ready to rip. However, we're at the end of the year and it's probably not going to happen straight away, but it could be happening early January. With the VIX front to back month, we're also on a hard sell signal, and we just need to wait and see how this plays out. The signal will become completely validated when this guy here crosses below the 1.21 or 1.22 area, and that will be the validation of it. But the fact that it's locked in above there, you want to get out now, essentially, because you don't want to be late. So the sell signal right now is valid, and it will completely become valid once it crosses that level there. So we could float around for a little bit more, but I'm expecting, January 1 or January 2nd or January 5th, things will probably start to take off. And it's really going to be hard to see what's going to happen because there could be more money coming into the market, but there could also be, now that we're in the different tax bracket, the next financial year, selling could take place, especially in metals. When we have a look at the crash signal indicator for XLP versus SPY, we can see it's a weekly chart. Anytime we're closing above the 10-week moving average, it's a sign of market stress. We had that here, and then we obviously pulled back for 3 weeks. And then same here with the Liberation tariff crash. We've had that signal validate, and it continued up, obviously. Now, the part here that I want to bring your attention to is these crash signals that were averted. However, we've had 1, 2, 3, 4 out of the last 6 weeks where that signal was above. Concerning. It's concerning. That's all we should note about that. There is concern here that something is going to take place soon. We're also at a low RSI here, so we're quite capable of turning up from this low point, and we'll have to see what happens. The MACD is also positioned that it's starting to head up, so we will see. Gold, I want to have a look here on logarithmic for this particular trend line. Interesting. I would just consider that you should keep this in mind. Trend lines normally play out. They play strong. You can see interaction here with the 50% level. And I think we're probably going to peak out 51, 5200 before it pulls back down. If we hit that point, that is, we have to keep that in mind that typically that trend line will play out. Now, interestingly, bull, some of the guys were trading this today. Have a look on a 2-hour chart. 1, 2, 3, 4, 5, 6 times we've smacked down on this support line. Eventually it's going to break. If you keep hitting support over and over and over again, more than likely you're going to end up breaking that support. It's not always going to act as support. And we can see here when we tag support down here, this time it bounced. We tagged, it bounced. We tagged, it bounced, went on this rally. Tag down here, decent bounce. Tagged here, not much of a bounce. Tagged again today and yesterday, not much of a bounce. So these last 2 attempts at testing the support, well, it's not looking good is the answer for those trading bull. So just keep that in mind. Again, trade with your indicators. Trend, buy and sell signals really helps you out. Know when to get in, know when to get out. You can see here we've got a buy signal and a trend change at the same time. Sell signal before that trend change. Know when to play it. All right. Thanks, guys. Hope you have a great week. Bye.